everyone, and welcome to today's morning report analysis videos on Thursday, 22nd of March with me, Rich Perry, market analyst at Hantec Markets. Interesting moves on markets following the Fed yesterday. The Fed hiked interest rates by 25 basis points. Looked a little bit more positive also on the statement. But it was interesting on the dot plots. We saw a very slight miss in terms of expectations, I suppose you could argue, in the fact that markets have been sort of positioning for maybe a shift towards 4 rate hikes this year. Got 3, yeah, there's been a little bit of a sort of a disappointing fade in the dollar since that meeting, and also the fact that on the projections, inflation still remains a key factor for the markets. The fact that inflation is not picking up, and the Fed, even though sort of it's gone more positive on growth projections and on unemployment, you're not getting the expectations of inflation coming through. And again, the dollar seems to have sort of faded on that. What we saw initially was a bit of a jump in the dollar, but that sort of fell into the close yesterday, and that fall has continued today. Look at these treasury yields. The 10-year initially bumped up to 293. But then fell away, and it's sort of almost 10 basis points lower than that now. But add into the fact that we've also got Donald Trump that is set to announce trade tariffs on China today. Well, the dollar is coming under a bit of pressure, and these markets have sort of turned back again. Equity markets, interestingly enough, this morning are sort of falling away again. We've seen the DAX under pressure. DAX underperforming when you see concerns over trade tariffs. That is an issue. Back at 12,200. 12,162 is a key support to watch on the DAX. FTSE 100 on the brink of 7,000 again, falling away. So yeah, we are seeing these moves, and dollar under pressure across the board. Interesting one here, Canadian loonie outperforming across the forex majors. The suggestions are that NAFTA negotiations are progressing, and that is subsequently why the Canadian loonie is outperforming. So yeah, interesting moves that we are getting on these markets today in the wake of the Fed announcement, and also the Donald Trump trade tariffs that are set to be announced today. Now, we've got a bit of a UK focus this morning, but in front of that, we've had the flash PMIs for the Eurozone. Disappointing again. Disappointing, falling away on across the manufacturing services and composite numbers. Quite a significant disappointment, actually. So these numbers are certainly rolling over now. In a few minutes, we've got the UK retail sales expected to be 0.4% up on the month, ex-fuel, but look at year on year, actually falling back to 1.2%. So retail sales in the UK, not all that great. But we do have the Bank of England this morning as well, at 12 o'clock in the, let's say afternoon. At 12 o'clock we've got the Bank of England, which is expected to sort of position really for the next rate hike. Markets are still factoring in May, pretty much on the short sterling interest rate futures. The sort of market is looking at May being the next month the Bank of England is going to move, and subsequently you'd expect some sort of lean towards that. If that was to be the case, you'd expect to lean towards that in the announcement today. Then into the afternoon, we've got sort of bit of lower tier US data, whereby we've got the jobless claims. If this data overloads, which doesn't look like it's doing, annoyingly. We've got jobless claims at 12:30. We've got flash PMIs at 145. Again, expected to sort of stay around where it was, as was the flash services PMI as well. But my chart today is EuroCAD. Now, that's interesting because I did EuroCAD. I looked at EuroCAD yesterday on the fact that it was falling away and coming back towards the test of this support. It had held initially this morning, but selling pressure has resumed this morning, and I say that because now we're breaking that uptrend, and also the 21-day moving average, which has flanked that uptrend. The market hasn't been below the 21-day moving average since mid-Jan. So the fact that we're now trading below that is interesting. But look at these momentum indicators. The RSI, negative divergence on those highs. We're seeing the MACD lines crossing lower, decisively now crossing lower. The stochastics accelerating lower. Is this going to be a move that, first of all, tests that key support at 57.60 area? Certainly looks like it could be. But then also break back inside that old uptrend channel. So that would be the feature to watch out for. Are we going to break back inside? If it starts to break back inside and break that support at 57.60, that also completes a small top pattern. So we could start to see the market correcting and accelerating in its correction if we see that move continuing. Now, what we have on the hourly chart is this sort of rolling over of the market in the last couple of days. Certainly, we've got more negative configuration on the momentum indicators. The RSI failing around 50 area now. MACD lines underneath neutral, stochastics falling away. Lower highs. Interestingly, the lower highs are coming around old support areas. Certainly this one this morning has. So 59.50 area of resistance from this morning, and sort of dropping away, making another new low. So you've got lower highs, lower lows, and rallies fading and being sold into. So yeah, be careful for that. As I said, if we close below that uptrend support and the 21-day moving average, this sort of move continues to suggest we're going to be opening that 57.60 support, which is the key near-term support to watch. But these momentum indicators on the daily chart are certainly suggesting that as well. So I wish you good luck in your trading, and I will speak to you later. Thank you.